Hey guys, Chris from Adaptation here, and in this video I'm going to show you how to prepare the appropriation account for limited liability companies. If you need to see the appropriation account for partnerships, I'm going to put a card up there and a link in the description below. If you're already familiar with appropriation accounts for partnerships, you know that an appropriation account is an account that is used to show what is done with the net profit at the end of the income statement. Now in a sole trader, it's just given to the owner. It just goes to the credit of the owner's capital account. In a partnership, well, we do a few things because there are multiple owners, so we need to share that profit. We pay partners interest on their capital balances. We may pay them partnership salaries. At the very least, we have to share the profit between or among the owners in the profit sharing ratio. Now with limited liability companies, we have just two things. We have dividends, which are amounts paid to shareholders out of profit, and transfers to reserves. Now a reserve is simply an amount of money set aside for a specific purpose. For example, if you were saving up to buy a new phone or to go on a trip after your exams, you might put aside money every month until you've built up enough to pay for whatever it is you wanted. Similarly with companies, they put aside money for things such as replacing fixed assets as they depreciate and wear out, disaster relief if there's an earthquake or some kind of natural disaster that damages the property, unanticipated losses, in case they don't make enough money in any particular year, you don't want to be caught out without any money to pay your expenses. And just a general reserve, which is savings for a rainy day. So it's important for companies to set aside money in these reserves because and to reinvest the money into the company to finance growth, because you don't want to always have to borrow money to finance future growth, because debts and loans and liabilities, those things put a strain on future cash flows. Why? Because you have to repay those debts, and not just the principal amount, but with interest as well. Okay, so therefore reserves are amounts set aside to do with whatever the company needs to do. And as you may know from my previous video, in which I showed you how to do the journal entries to record the issue of shares and debentures for limited companies, dividends are amounts paid to the shareholders. The shareholders are the owners of the company, and the owners invest their capital, their money, into the business with the expectation of getting something back in return, a return on their investment. And that is literally cash paid to them out of the profits of the company. And those amounts paid to them are called dividends. As you should know, we have two types of shareholders. Well, for our purposes, for CSEC, you have ordinary shareholders who bear the most risk in the company, and you have preference shareholders. Preference shareholders receive their dividends before ordinary shareholders, and they also receive a fixed rate of dividend every year. Ordinary shareholders do not receive a fixed rate of dividend every year. It can vary. So what we're going to do, we're going to go through about 6 examples that show you how to prepare an appropriation account, but I just want to let you know that there's no one right way to do this, and I will make reference to that as I go along through the examples. There are different ways you can present this, and I just want you to know that, so in case you use a different method than I'm showing here, that's fine. Okay guys, so let's get into it. So here we go with example 1. Let's take a read. So it says KTB Limited was incorporated on 1 January 2020. On that day, it issued 500,000 ordinary shares at their par value of $1 each, and 250,000 10% $3 preference shares at par value. Once again, if that stuff isn't making too much sense to you, you should probably go and take a look at my video on how to do journal entries to record the issue of shares. I may have put a card earlier, but I'll also have a link in the description below. All right, now at the end of its first year of operation, its net income before appropriation amounted to $1 million. All right. The directors declared the preference dividend and an ordinary dividend of 20 cents per share. And they announced transfers to the general reserve of $100,000 and the fixed asset replacement reserve of $200,000. So what we need to do is prepare an appropriation account for the year so ended. So let's start off by heading up properly. So name of the entity, KTB Limited, name of the statement, appropriation account, the period for the year ended 31st December 2020. Let's get some dollar signs going. So we're going to start with the net income before appropriation of $1 million. And we're going to subtract our appropriation. Now we'll start with dividends. Now some people put the transfers to reserves before the dividends, and as I mentioned before, that's fine. Arithmetically, it's not going to affect the final figure in the appropriation account. I know some people say you need to put your transfers before because your dividends are paid after you make your transfers. Okay, that's all well and good, but I don't see that it has to be shown like that. But once again, it's not wrong. I don't see where mine is wrong. If, however, any teacher is watching, any professional accountant, and you know why that is not the preferred way, as in putting dividends before transfers, please leave a comment in the description below. If you have a link to a resource that explains why, put that link in the description below, and we will very much appreciate it. Okay, so let's go. Dividends. So the preference dividends are paid first. So let's take a look at that line that says $250,000, 10%, $3 preference shares at par value. The 10% is the dividend rate, and it's 10% of the par value of the shares in issue. Now we've issued 250,000 shares, preference shares, and they are $3 preference shares, as in they each cost $3. So if you issue 250,000 shares at a cost of $3 each, the value of the shares would be 250,000 by 3, which is 750,000. And you find 10% of that, 10% of the par value of the preference shares, which will give us 75,000. So you can see I put my work in kind of in the space next to the word preference. Now I don't write the word preference dividends, the phrase preference dividends, because preference is under the subheading dividends. So to me, putting dividends again is redundant and unnecessary. But once again, your teacher may have a different opinion, and you're trying to please that person, at least temporarily. The ordinary shares, now they're paying an ordinary share, let's say it says in that last paragraph, 20 cents per share. So how many shares, how many ordinary shares do we have issued? I'm seeing 500,000. So we're going to multiply 20 cents by 500,000, which is going to give us 100,000. So our dividend total is 175,000. Of the transfers to reserves, there's no calculation. All you have to do is list them and put the amounts. So the general reserve transfers 100,000. The fixed asset replacement reserve transfers 200,000, totaling 300,000. Your total appropriation is the sum of those two figures, giving us 475. And when you subtract 475 from the 1 million, you're going to get 525, and that is your retained earnings carried forward. So retained earnings is all of the profit left back after all expenses and appropriations have been paid and made, respectively. And that's what's left in the company for it to do whatever it needs, like I said, to reinvest to finance future growth. Okay, so there you have it, a simple appropriation account. Let's do a second example now. So let's take a look at example 2 now. So M Limited has an issue 1 million ordinary shares of $2 par value each and 300,000 8% $4 preference shares. At the end of its second year of operation, 31st December 2019, it had a net profit before appropriation of $1.2 million and a retained earnings balance brought forward of $800,000. So remember, retained earnings is profit left over after all expenses have been paid and appropriations have been made. So we have 800,000 brought forward from the previous year. So we'll see what part that plays in the appropriation account. The directors have declared the preference dividend and an ordinary dividend of 50 cents per share, in addition to transfers to the following reserves: 150,000 to the general reserve and $250,000 to the unanticipated loss reserve. So let's see what is different in this situation. So let's head up. WM Limited appropriation account for the year ended 31st December 2019. $. Net income before appropriation, or net profit before appropriation in this case, 1.2 million. And I like to add my retained earnings balance brought forward here, because this will then show me my total earnings available for distribution. I will talk a bit more about the alternative placement for this item in the next example, but for now, let's just go with it as it is. So now we're going to make appropriations out of the earnings available for distribution. First thing we have is the dividends. So the preference dividend. So remember, we had 300,000, 8%, $4 preference shares. The 8% is the dividend rate, and we're multiplying that by the par value of the preference shares in issue. The par value is $4 per share, and we've issued 300,000 preference shares. So therefore, you multiply those two figures together to get $1.2 million worth of preference shares in issue. 8% of that would be, I think, 96,000. Let's take a look. Right, and you see my working right there next to it. You can put your working there as well. The ordinary dividend is 50 cents per share, and there are 1 million ordinary shares outstanding, which means you're just going to have 500,000 in dividends paid to them. Total dividends paid, 596,000. Transfers to reserves, once again, no calculation, just pull the figures. General reserve, 150, unanticipated loss reserve, 250,000. Once again, there's no one right order in which those have to be listed. you can put the unanticipated first, general second. And once again, if there are any accounts teachers, any professional accountants, anybody who knows different and that there's a specific order for them, please sound off in the comments below and put a link to anything that can support your claim. Not that I think that you're lying, but I just want to know that we're telling these kids the correct thing. So we have a total transfer of 400,000 there, which means the total appropriation is almost $1,996,000, subtracted from the 2 million, which will give us $1,004,000 of retained earnings carried forward. So what I'm going to do is, instead of cutting here, I'm going to just skip across to the next example, which actually is the same example, but all I'm going to do is let me just head up one time, double M appropriation. We ended that. Okay, so like I said, there's an alternative placement for the retained earnings brought forward, which is at the end instead of at the start. Let's see what that looks like. So we have less appropriation, we have our dividends with the same preference of 96, the same ordinary of $500,000, same 596 in total, transfers to reserves, the same 150, the same 250, so same 400, so 996, giving us earnings after appropriation of 204, and we'll add the retained earnings brought forward there, giving us retained earnings carried forward of $1,004,000. So it's the same exact figure from before. But once again, it's just an alternative placement. So, like I know different teachers show different formats sometimes, so I'm just trying to be a bit flexible. And once again, it's reinforced there's no one right way to do this. So please feel free to sound off any comments about which method you prefer. So example 4 now, we're going to take a look at I. George Limited. So it just finished its third day of operation on 31st December 2019. It had gross income, gross profit, okay, of $1.5 million, and the following expenses: director's remuneration, $200,000, interest on debentures, there are $500,000 worth of 10% debentures in issue, and all other expenses, $150,000. So before we go any further, we have some new items, new expense items for LLCs. The first one is director's remuneration. So remember, directors are those people who the shareholders or the owners elect to run the company on their behalf and to make decisions on their behalf as well. Now, don't forget, shareholders do vote on certain decisions at the annual general meeting or the AGM, but the directors run the company on their behalf. Remuneration is a fancy word meaning pay or salary. So we show this item in the expense section in the income statement. It's basically directors' salaries. Interest on debentures. So remember, debentures are like a type of loan a company takes in order to raise money to finance operations. And with any loan, interest is attached, and interest is an expense. So we're seeing here we have 10% debentures. 10% is the interest rate, and we'll multiply that by the value of the debentures in issue, which is, in this case, $500,000. All other expenses, $150,000, so simple and straightforward. Appropriations. Pay the preference dividend, 6% on $300,000 worth of preference shares. Pay an ordinary dividend of $1.50 per share on 800,000 ordinary shares. Transfer $400,000 to the general reserve, and transfer $750,000 to the special reserve. It also has a retained earnings balance of $1.6 million. That should have said at the start of the year. I guess it got cut off. So let's see how this will look. So let's start by heading up I. George Limited, profit and loss appropriation, because we are starting up just at gross profit or gross income. For the year ended 31st December 2019, $. So gross income, $1.5 million, less expenses. So like I said, director's remuneration is just an expense, so we subtract it as such. The interest on the debentures, well, that's 10% is the interest rate, and we have $500,000 worth of debentures in issue. 10% of $500,000, $50,000. All other expenses, $150,000, totaling to $400,000 in expenses. So we have $1.1 million net income before appropriation. I add my retained earnings balance here to have my earnings available for distribution visible. So let me scroll down a little bit so we can see from that point go forward. So what appropriations do we have? We have dividends, sorry, I said the wrong thing there. So preference dividends, so 6% on $300,000 worth of preference shares. So in the previous examples, we had to calculate the preference share value by multiplying the number of preference shares by the value or the par value per preference share. Here, they've given us that figure. So all we have to do is find 6% of 300,000, which is 18,000, I believe, and ordinary dividend $1.50 per share on 800,000 shares. That's about $1.2 million. So we have $1.218 million in dividends, Transfers to reserves, one to general of 400, special of 750, total 1.15 million. That's going to give us 1.3 something, 2.368. Sorry, when I teach maths, I should go to do it in my head. And we, of course, just going to subtract it to get retained earnings carried forward. Right, so the new items that we saw here up in the expenses section were the director's remuneration, which once again is simply the director's pay or director's salary, and interest on debentures. Now, we should know about interest from before anyway you take it, but here it's specific to the debentures. Doesn't change anything about where you put interest, it still goes in the expense section. Okay, let's take a look at the next example. Alright, so here we have Wanshi Carlin had net income before debenture interest of 2.62 million for the year ended December 31st, or 31st December 2018, sorry. It had in issue $1.5 million $1 ordinary shares, $0.75 million 5% $2 preference shares, and 100,000 12% $10 debentures. The directors declared the following: pay the preference dividend and an ordinary dividend of 80 cents per share, and transfer $250,000 to the general reserve and 400,000 to the special reserve. There was a retained earnings balance at the start of the year of 1.5 million. Okay, so the newish item here is that we have net income before debenture interest. So this is something they have brought multiple times, and they like to bring to see if you know your business. So the net income before debenture interest, we need to basically subtract debenture interest from that before we can make our appropriations. So let's head up. So Wanshi Carlin Limited appropriation account for the year ended December 31st, 2018, $. Net income before debenture interest minus debenture interest. So that's, we have 100,000, 12%, $10 debentures. So we have 12%, which is the interest rate, and 100,000, $10 debentures. So you multiply those two together, you get $1 million worth of debentures. Multiplied by 12% is 120,000. So we subtract that, we're going to get 2.5 million. So that's our net income before appropriation. To that, we add the 1.5, which is the retained earnings brought forward, giving us 4 million available for distribution. Less appropriations. Now, what appropriations do we have? We have dividends, preference dividends. So we have $7.75 million, 5%, $2 preference shares. So by now, we know we take the 5%, which is the dividend rate, and multiply it by the par value of the preference shares in issue. How do we get that? We multiply the number of shares in issue by the par value. 750,000 by $2 is $1.5 million worth, and then you multiply that by 5%, we get $75,000 in dividends for preference shares. Ordinary shares, 80 cents per share by 1.5 million is $1.2 million. So we have 1.275 million. Okay, let's scroll down a bit so we can properly see everything here. Transfers to reserves, we have just two. General reserve of $250,000 and 400,000 special reserve, 650,000 total transfer, giving us 1.925 million in total appropriations, and therefore 2.075 million as retained earnings carried forward. So here the trick was that they gave us net income before debenture interest, which meant that we had to subtract debenture interest before starting appropriation. Not that bad. Okay, so one more example, volunteer hats. If you're wearing hats, I don't know. So our final example will be Second Star Limited commenced operations Jan 1st, 2019 by issuing the following: 1.2 million $1 ordinary shares at par value, $250,000 8% $2 preference shares at par value again, 600,000 15% $3 debentures. Halfway through the year, the company had earned a net income of $1.635 million before the deduction of debenture interest. The directors declared the following: payment of the preference dividend, an interim ordinary dividend of 10 cents per share, a transfer of $250,000 to the general reserve. Prepare the appropriation account for the 6-month period ended 30th June 2019. Okay, so this is an example where instead of doing an appropriation account for the whole year, we have a half a year. Now the implication therefore is that anything with a percentage attached to it, such as interest or perhaps the debenture, the preference dividend, percentages are always given from a per annum perspective or a yearly perspective. So it's 15% interest on the debentures per annum. But if it's not a whole year, we can't pay the whole 15% because that has not been incurred up to the point in time at which we find ourselves. So we have to prorate it. We have to adjust it for the length of time for which we are doing the statement. And if it's 6 months, what fraction of a year is 6 months? That's half a year. Anytime you need to figure out the fraction of a year, you take the number of months and put it over 12, 12 being 12 months in a year. Let's take a look and see how this will come out. So we have Second Star Limited, appropriation account for the 6-month period ended 30th June 2019, $signs. Net income before debenture interest, so we have to deal with the debenture interest, which is 600,000 debentures, 15% interest, and $3 each. So 600,000 by $3 is 1.8 million. 15% of which is 270,000, but that's for an entire year. Are we doing for an entire year? No, it's only half a year. So we have to multiply that 270 by half, or 6 out of 12, 6 months out of the 12 months. So it'll look like this. 15% of 1.8 million by 6 out of 12, giving us 135, leaving us with a net profit before appropriation of 1.5 million. Let's get into the appropriation now. So we have dividends first. So the preference dividend, so we have $250,000 $2 preference shares, which means 500,000 worth of preference shares issued, 8% dividends. So do we adjust this for the 6 months? Well, it's a percentage, so let's see what happens. So that's going to give us 20,000. The interim ordinary, so interim means during the course of something. So it simply means during the course of the year we pay like an initial dividend of 10 cents a share. We have 1.2 million ordinary shares outstanding. 10% of that is 120,000, which gives 140,000 for the dividends. Transfers, we have one transfer to reserves, of general reserve of $250,000. Total appropriation is 390, and retained earnings carried forward of 1.11 million. Now, that seems, like I said, relatively straightforward, except for the little adjustment we have to make. My question is this. This item, the preference dividend, should that be adjusted for the 6 months out of 12? Now, it's not a trick question. I'm genuinely asking because something like this appeared in a relatively recent exam. Well, recent being today is, well, we're in February 2020. So within the last 2 years, a question almost just like this came. And it was a 6-month period, and they said they paid the preference dividend. So my thing is, the preference dividend should be the full 8%. It should be the full amount. But it's still a percentage. And if we treated the debenture interest one way, why are we going to treat these dividends another way? They're both percentage based. Now the thing is, debenture interest is an expense, and expenses accrue evenly over time, which means that after 1 month you've accrued or incurred 1 month's worth of interest. So it's not to say that you've incurred, once the year starts, you automatically owe them the entire year's worth of interest. No, that entire year has to pass before you owe them all the interest for that year. But that's an expense. A dividend is not an expense. It's an appropriation of profits. It's an amount distributed to shareholders. So the question is, does that dividend accrue evenly over the course of the year? So I'm thinking, part of me is thinking yes, and I mean, I understand the logic. And another part of me is saying, well, what about if we just pay them the entire amount at that point in time? We'll just have no dividend left to pay them at the end. So I'm going to put a poll card up there for you all to take a vote. What do you think is the correct treatment? And I promise I'll find the answer and I will put it in the comments, in my description below. But I'm going to give it a few days, maybe a few weeks. I want to get some feedback from you guys first. So what do you think is the correct treatment in this particular case for the preference or the payment of the preference dividend at the halfway point during the year? Do we just pay half because only half of the year has passed and therefore we only owe them half? Or is it not an expense? Well, we know it's not an expense. It's a distribution of profit. And do we therefore only pay them the entire thing now and none at the end of the year? So take a vote. And if you do know the answer, comment below. And if you have a resource that can prove that you know what you're talking about, link it there as well. We're trying to learn here, right? And like I said, I don't know everything. I never professed in everything. I know a bit, and I like to share it, right? But of course, I do have gaps in my knowledge. So let's see if we can figure that out. All right, guys. So outro time. Okay, guys. So there you have it. Those are 6 examples of appropriation accounts for LLCs. And by no means are those all the different tricks that they can bring or things that they can ask you for. Those are the basics and some little twists here and there. So I encourage you to try as many different questions as you can, including past paper questions. And once again, please don't ask me to send you guys or email you guys past paper questions. I can't do that. You can pay for a subscription on the CXC website. I'm going to put a link in the description below, so you can go to cxe-store.com and you can get a weekly subscription. You can get a monthly, 2 months, 6 months, a year, 2 years, and you can have access to all of the past papers they have there. If you want solutions, I'm your guy. I've put them up on Facebook already. I know some of you guys say Facebook is for old people. Just humor yourself. Create an account on Facebook, look for Adaptuation. I have solutions for POA, maths, and add maths. All right, so don't deprive yourself of that just because you figure Facebook is for old people. It's not, right? There are lots of things that are very valuable there. There are other people there who want to help you guys with the different subjects as well. You just need to look for them, okay? All right, guys, so I just want to take a little couple seconds here to remind you guys that in the process of learning anything, that process is not going to be a perfect process. You are going to struggle. You are going to make mistakes. You're going to get things wrong. You're going to be frustrated, not know what to do. And you need to understand that that's perfectly normal. It doesn't mean that you aren't as capable as other people. It just means that you need to figure out what works for you. And even the people who you think are very bright and get 90-70%, don't think that they don't struggle at certain points in time. But you need to understand that comparison is the thief of joy, right? It robs you of your joy. But at the same time, you need to know how you are doing compared to where you want to be. So you have to use it carefully. It can drive you insane. So like I said, it's up to you to find that balance. And even I make mistakes and I have to learn from them. And like I said, mistakes are part of the process, right? And the thing is, we need to know if we are going the correct way or we need guidance, because we need to know that what we are doing is the correct thing. And if it's not, then what is the correct thing? So that's why I make these videos, right? And once again, if any of you have any questions, please feel free to leave them in the comments below. I love hearing from you guys and I'm responding to you, right? I'm hearing from people all over the world and it's very interesting. I never thought that I would do this stuff, but I mean, I'm very happy doing it. And also, yeah, you guys can let me know what topics you want to see. I've had some requests for manufacturing accounts, lots for balance sheets. I think I may have one more thing to do with LLCs before I tackle any other topics. But I may change my mind and jump straight to manufacturing. And as you guys know, these videos take a little bit of time, so please have some patience. I do have a job, which is my classes to prepare for, so I kind of do this on the side. But that being said, I do want to put out more content for you guys because I love helping you guys. Anyhow, you can do anything you want to do. You can be anything you want to be. If you believe that you can, you have to have the correct mindset. And you have to put in the work. There's no substitute for hard work. And on a long enough timeline, you can outwork anyone. But we know that time is often very limited. In any case, no matter what you are doing, you are going, like I said, you're going to struggle at some point in time, and that's okay. It's okay to ask for help. And if what you're doing isn't working, then you need to try a different approach to it. You need to adapt, because change is the only constant. All right, guys, thank you so much for watching. Don't forget to like, share, and subscribe, and I'll see you next time. Bye.